Yes, I think so. Put it very simply, is 50% of Huawei's device shipments. Huawei is now the very strong #2 in Android. Half of all of its shipments are sold outside of China, and all of those shipments depend on Google services being present on them. And if they're not present on them, no matter really how good anything Huawei comes up with, they're going to have a really difficult time selling devices outside of China. And that is the essence of the problem.
Now, Richard, how does this block compare to the blockade that Washington put up against ZTE?
It's actually not as bad, because when ZTE was blocked, it was basically a situation of you will not sell anything to these guys, period. Now, what you've got a situation now is that there's an entity list, which basically means that if US companies want to sell stuff to Huawei, they have to apply for government approval. How difficult it is, whether they will choose to apply or not, remains completely open to question. But so consequently, as a result of that, it's not as bad, although if people the US stops selling stuff to Huawei, then the problem is going to be just as bad for ZTE.
How do you think about Washington's motivation for this move? Is Huawei simply caught in the crossfires of a trade war, or do you think that Washington's end goal is to take Huawei completely out of the market?
No, I mean, I can't really see any particular reason why Washington would have a particular grudge against Huawei and want to put them out of business. I think what they're really after is the USA wants what it thinks is a fair trade deal with China, and Huawei is simply ending up being a bargaining chip, seeing as it is seen to be very close to the Chinese government. And obviously, if Huawei suffers really badly, it's going to have an impact on China's willingness to negotiate with the USA.
A couple of questions from an investor's perspective, Richard. How long should people expect to wait until they see the impact of this on Huawei's revenues and, in fact, its bottom line as well?
Well, that's a great question. I mean, the first thing out there, don't forget, is Huawei's not listed, so it's not going to actually produce 2019 figures until sometime next year, so you won't see it for a while. However, in terms of the fundamental impact, I would expect a good 3 months, simply because the devices that Huawei's already launched this year are not impacted. So this year's device schedule looks fairly okay. And it also claims that it has 90 days of inventory for the component pieces that it's going to have trouble with. So I look at it like this, is Huawei has got 90 days to sort the problem out before it may start to take a hit.
So for those firms that are publicly listed, where can investors go looking for opportunity as a consequence of this move, do you think?
Well, I think Nokia, as your previous commentator mentioned, is certainly one place to go, because obviously if Huawei falls away, Nokia can move into that slot and is better positioned to move into that slot than Ericsson. The other one I would look at is Samsung, because if you look at Huawei has really caused Samsung's handset business some grief in the last 2 years. And profitability is down, market share in Android is down as a result of that. And so with Huawei being put out, then Samsung has got a great opportunity to re-establish its dominance in the Android, which would allow both market share to go up and its margins to go up. So from that perspective, there could be a fairly good increase in profitability, which should impact the share price.
Hi, I'm Joanna Bersecci, and thank you for watching. You can check out more of our videos by clicking on the boxes on the screen. And don't forget to subscribe to our channel for more from CNBC International. Thank you for watching.